All right, and now we'd like to speak to Kevin Tuitoek about outlook of the Nairobi Securities Exchange this year. Of course, the profit warnings made 2015 one of the toughest at the Nairobi Securities Exchange. Some of the factors there were ranging from the impact of a weak local currency, accounting fraud, as well as increased competition, which are just some of the reasons that were blamed for the dip in 2015. So will 2016 be better for local businesses, particularly those listed on the boards? I'm joined by Kevin Tuitoek, as I mentioned earlier, macroeconomic and agriculture sector analyst at Genghis Capital. Just a quick look at who Kevin really is. He's a macroeconomic and agriculture sector analyst. He's got a BA in International Relations Development Studies from USIU, and he's currently undertaking a master's degree in public policy at the Strathmore Business School. Thank you so much for joining us on the Business Center tonight. Now, of course, 11 listed firms announced profit warnings in 2015, meaning, as I was mentioning earlier, we'll either expect a cut in losses or a decline in profits as well. How bad do you think these results are going to be?
Well, largely we've seen that there's been a bit of an impact. This is based attributable to, as you've mentioned, some currency volatility and some losses that some of these companies are faced due to competition and external factors. It depends, largely attributable to different companies, because some may face higher losses, but largely I do expect 2016 to look more optimistic as a whole.
Of course, most likely, those who are investing because of dividends will also be facing a tough time. Do you think they will stay in the market, given, the perceptions around going into an election year, foreign investors who are the majority at the Securities Exchange, perhaps pulling out and waiting to see how the elections pan out next year? What's in for the investor who looks for the dividend?
Largely on the back of the results for the previous financial years, I do think that our dividend payments will be a bit repressed. However, if you're looking at a long-term outlook, current stock prices are currently very low. So if they're able to engage into the market right now, I do think they can be able in the long term to reap quite a number of good gains.
Are you optimistic about Kenya Airways? And we've just seen there what Kalpa is asking for. Alex Mbugwa, who has long served as finance director, has just left as well. Yes, we did see they've begun to sell off some of their aircraft. Are you optimistic about Kenya Airways this year?
Kenya Airways has begun undertaking some of its restructuring programs. We've seen that they've gotten on board Seabury and McKinsey. The whole turnaround strategy is starting to take effect. The directive is in line with the Senate recommendations and some of the key moves that people would like to see in order as to revitalize the company. However, we're seeing a lot of competition coming to the fore, especially with FastJet getting into the airline's route system. However, I do think that there are some positive upsides, especially with the sale of the assets. That's mostly the land and the aircraft. At least they can be able to get some short-term capital, and also in line with some new route expansion, and also a concentration towards the African route and possible cargo towards the US. So there are some upside elements. However, it remains to see whether they do adhere to the policy implementation frameworks that are guided by the recommendations of McKinsey and Seabury.
All right. Of course, 2017 is an election year, and some say, the NSE is at the bottom of the cycle, and some say it's the best time to buy stocks when they are at their cheapest. What would you advise somebody who's looking to buy? Is this a good time?
It's always a good time to buy when stock prices are repressed. If you're looking at some of the stocks, especially in the banking sector, you're seeing that their par value is relatively lower, even if you're looking at it on a 52-week basis. There's a lot of upside potential, especially as some of these banks are about to announce some strong earnings. So I do think that at their current price, it is quite attractive, and they can be able to at least gain when the stock market does rebound. And also some insurance sector stocks can be quite attractive, especially those that have invested in the NSE. So any positive NSE uptick would mean that the insurance sector would have a positive outcome.
All right. Thank you so much for sharing your thoughts with us. Kevin Tuitoek from Genghis?
Yes.
Genghis Capital. We were arguing about it earlier. So is it Genghis? Is it Genghis? Is it... Genghis Capital. Thank you so much for sharing with us your thoughts on the stock exchange.